Dear students, now I am going to take class about journal entries. Journal entries are the first entries made in the business to how and when transactions take place. So when a cash goes out or cash comes in, or all the transactions are recorded in the journal first. So this is the primary entry and is the first base for all the business transactions. So what are all necessary for our journal entry means transactions, and as it is, journal entries are recorded on the double entry basis, one debit and one credit transaction should be there. So it affects both the debit and the credit transaction. So for every journal entry there should be a debit and a credit date, and it is recorded on the chronological order, that is on the daily basis and on the date wise. So date, then particulars, then ledger folio, debit, credit. All these are necessary for a journal entry. Then and it has to go by step. First you have to identify which account about the transactions are belonging to. Then identify the transactions, that is real account, a personal account or a nominal account. Then post the entries according to which comes and which goes according to the rules. And now we will go in for an example to see how the journal entry works. So this is the format of a journal entry. Date, particulars, then ledger folio, then debit, then credit. This ledger folio is to take that particular account into the another ledger when we have to go into a ledger posting. So before going into this, we will see an example where Ram paid cash 1000 rupees. This is a transaction. We can now see which are all the accounts are affected between Ram and the cash. See, there are before going into it, you know, three types of accounts are there. Accounts are classified into three types: personal account, real account and nominal account, right? Personal account are names of persons, then business entity, banks, etc. So all names of persons, banks, then business concerns like Tata, TVS, etc. Then real account. Real account are cash, next is real account and nominal account. So these real account and nominal account come under this impersonal account. So personal account we already seen. So real accounts are further classified into tangible and intangible. Tangible means which is visible and which can be touched, felt, everything. So intangible means we cannot see, but these have a value. So real accounts are further classified into tangible and intangible, and these tangible are assets: furniture, plant, machinery, stock and cash. Cash is also a asset for us, so it will be recorded in the asset. So intangible accounts are patent rights, copyrights, patents, trademarks, goodwill, etc. So these two categories are from real account. Next comes the nominal account. Nominal account means all expenses, losses, revenues, gains, everything will be recorded in this nominal account. So before we put a journal entry, we have to look into this, the two transactions which are being affected, which will be falling under which category of this account. For this only I explained this. Now we have given an example here of What is it? Ram has paid cash of 3000. So now coming under this, we are again, so sorry, 1000. So Ram has paid cash 1000 rupees. Now before we go into this account, now we will classify this personal account, real account we already seen. And what is the golden rule? 3 rules, right? We have all these, no? For personal account. Personal account, what is the rule? Debit the receiver, then credit the giver. This is the rule for personal account. Then real account. Account, debit what comes in, credit what goes out. Then nominal account, debit all expenses and losses, credit all incomes and gains. So these transactions will be recorded in the profit and loss account. We will say later about it. So personal account means debit the receiver. When a person receives cash or whatever, so a person receives means he has to be debited. Or if a person gives means he has to be credited. So real account means debit what comes in. So in real account, if it is a real account means whatever comes in should be debited, and if the real account falls means we have to credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. All expenses means whatever rent, advertisement and all expenses like this will be recorded in the debited in the debited, and credit all income, commission received, rent received, all will be credited. So now we can look into this example. How to be, this one should be journalized. So for this we have to see which 2 accounts fall category, this Ram and cash will fall under. So Ram is a personal account. So Ram is a personal account because it is a name of a person. So personal account means rule is debit the receiver, credit the giver. So Ram paid, so he gives cash. So Ram has to be credited here. Cash comes under the real account. So cash comes in. So it has to be debited. So cash account debtor to Ram. This is the journal entry. Now we will see here. Date. So you will put a date on 15/6/2020. This transaction has taken place, for example. So cash comes in, right? Cash account debtor. So ledger folio whatever. So debit means here 1000 rupees. So you have to put 2. So after debiting first means you have to put data, and inside little bit gap you have to write the second line to Ram. Credit the giver. 1000 rupees credit column. So this is the transaction. Now we have to narrate this one. So being Ram paid cash. A simple narration regarding describing this particular transaction has to be written for every journal entry. Likewise only all the journal entries should be recorded in the date wise on a daily basis. So if this particular transaction is not recorded means the cash which had come in or Ram paid, whatever the amount Ram paid will be totally ignored. So we cannot trace out the transaction at all. So each and every transaction should be recorded as a journal entry, and journal entry is the first and basic entry for all the business transaction.